Good day, everyone, and welcome to Forex Street webinar of 25th November 2014. My name is Nenad, and today I will show you Fibonacci tools. So we will deal with Fibonacci fans, arcs, expansions or extensions, and Fibonacci time zones. So these tools, I know that many traders would like to know something about these tools, but unfortunately, those infos on internet are not available. So basically, I will show you how you can use these tools to your advantage. Before we begin, of course, as always, our standard is disclaimer. Risk disclosure statement stating all possible risks associated with Forex market. By accepting this risk statement, you're also proceeding further with me. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author and in no way it represents the actual suggestion for the trade. These are not MQA's opinions, and the website in the video is not a .co.uk website but a globalnews.com website. Forex is risky business and this is a personal opinion only, and this webinar is for informational and educational purposes only. With having said that, now we are ready to proceed further, okay? So Fibonacci retracements, we already talked about it, so we won't talk again. If you want to listen to Fibonacci retracement webinar, please refer to Forex Street webinar. It's uploaded, and it was uploaded after my last webinar. Fibonacci expansion, Fibonacci arc, Fibonacci fan, and Fibonacci time zone. So basically, these are the tools which we have been using in trading Fibonacci and price action. Okay, now let's move quickly to Fibonacci extension because I will show you also on real charts how you can draw it, not just slides but real charts. But first we need to go through these slides, of course. So let's start first with Fibonacci expansion. Fibonacci expansion is a well-known tool. It's used for three main reasons. The first reason is to determine the distance of 1, 2, 3 pattern. Now, what is 1, 2, 3 pattern? This is bullish 1, 2, 3. So this is 1, 2, 3. And this is basically bearish 1, 2, 3. So we have point 1, point 2, and point 3. And that's called 1, 2, 3 pattern. 1, 2, 3 pattern is usually used for entry. So Fibonacci expansion is used to determine the distance of 1, 2, 3 pattern to find possible support and resistance zones and confluence of support and resistance levels. And finally, it's used for taking profits or closing your profitable positions. Okay? Now, you need to distinguish between Fibonacci retracements and Fibonacci expansion. Fibonacci retracements are used to take a position in the market. Expansion is used for closing of a position, so-called taking profit. Okay? Let's talk a little bit about the nature of Fibonacci expansion. Let's say, for example, that we have A and B, and that is the same line, but we have basically divided the line for point A and point B. Now, A plus B is same to A as A is to B. Okay, A plus B is to A as A is to B. So that is the basic logic behind Fibonacci expansion. Three most popular points used in this indicator are 61.800 and 168. So these are the levels where we take profits. Remember, these are the levels which can serve either as resistance or support levels. 61.8 is a key Fibonacci level. It's a so-called golden ratio. 100% does not form part of the Fibonacci sequence, but because basically expansion is a sort of wave, is derived from an Elliott wave theory of a measured move. Measured move takes advantage of the fact that wave C or wave 3 will often move the same amount that wave A did, though perhaps at a different angle. 168 point represents the total distance before reaching point A from point B. So it's basically a simple 1 to 3 pattern, and we have 1 to 3 wave in it. So this is bullish 1 2 3, and bearish would look like this. Okay, 1 2 3. Now this is the example of Fibonacci expansion. So this is the example basically how we can use Fibonacci retracement along with Fibonacci expansion. Okay, so first we have a downtrend. We have identified a downtrend. We draw Fibonacci retracement. So these black lines are Fibonacci retracement levels. We can see that after this retracement, it stopped to price stopped to at 78.6 and then closed beyond 78.6. Now we won't delve deeply into, because each system and method has its own ways of placing entries, but it's enough to say that at this point we could either take a position at 78.6 as I do with my Camarilla MACD, or we could wait for a candle close to enter a position. That basically is how you determine the entry. And now after you determine the entry, which is basically, let's say, at this top 78.6, we want to see where the price can go and where we can take profits. Then we draw Fibonacci expansion. Look at this. This is point 1, point 2, and point 3. These 2 points will basically give you point 3. So you will draw this point 3 to this point. After I finish with slides, I will use remaining time to show you this on real-time charts. Okay, so this is point 1, point 2, and point 3. And these levels are automatically drawn on your chart. Fibonacci expansion 61.8, 100, and 168. So these are the levels where we take profits. These are the levels where price will react. So from left to right, always from left to right. In downtrend, from point 1 to point 2. So this is point 1 and this is point 2. So you connect this red line. After you connect the 2 points, you will notice that Fibonacci expansion will give you point 3. You need to manually move this point 3. So you will left click on this point 3 and place it here. Okay? So you will manually place this point 3 here, and you will get the chart like this. Okay? So from left to right, always from left to right. Then in downtrend, from point 1 to point 2. Okay? And then you will see a free point 3. You left click on this point and move it here, because you made your entry here. Or it doesn't matter, maybe you made your entry there, but it's still part of the same retracement, because this was the swing high, then this was the swing low, and this was a next swing, which is basically a lower high. So you connect swing high, low, and lower high, and then you will get levels which are automatically placed on the chart. Okay? So this is Fibonacci expansion in downtrend. In uptrend, it's basically same, but you just need to do it vice versa. You have point 1, point 2, and let's say that this is point 3 where you made an entry, somewhere around this region here, and look at the targets. Look how price beautifully reacts to these levels. Rejections, rejections, breakout, rejections, breakout, rejections. So Fibonacci expansions are widely used, and that is why traders love to use it for taking profits. And I personally know that many of scalping systems, which are basically dealing with indicators in it for placing entries, determining trends, they really like to use Fibonacci expansions for taking profits. Even Bill Williams used Fibonacci expansion in his chaos theory, and I know that many traders who are practitioners of chaos theory use Fibonacci expansions. So this all can benefit to you. It just cannot give you any disadvantage in using this. So you can all benefit from placing Fibonacci expansions on your chart. I really love to place Fibonacci expansion, especially when I want to make targets. And you can see that euro dollar, for example, if you followed my analysis last day, and especially these last couple of days, you could see that euro dollar basically now is being rejected from 24.65, and that is also very important level on Fibonacci. So that is why now the question, are expansions and extensions same? Yes, some call it expansion, some call it extension. So those are the same thing, expansion and extension. And yeah, Fibonacci used it a lot, of course, but definitely not in trading, because Fibonacci didn't trade at that time. He was just making his calculation and with Bukabachi or Fibonacci, how he called it. Book of calculations. Yeah, that was the translation from that book of Abachi. Yeah. So we will always have benefits if we place Fibonacci expansion, not just to determine single target points, but to determine confluence of target points. So if you use, let's say, if you use, for example, pivot points for determining targets, you're free to use Fibonacci expansion to determine confluence points. So let's say this is the example. You have made your entry somewhere here at this candle, and then you place Fibonacci to see where the price might go. If you have pivot point here, here, or there, that will be basically the confluence. So once the price reaches this level, you can manage your trade accordingly. You can scale out, you can take all position in profit, you can put your stop to break even, you can basically try to make a scalp into an intraday position. We will have webinars about it. I will teach you how to make scalp effectively into an intraday position. So these are all things which you can use to benefit from these simple yet effective price action tools. These are most important extension levels, and I advise you not to change this once your platform has shown this to you. So these are the most important Fibonacci expansion levels: 61.8, 100, and 61.8. So these three. And these three can serve you either as a confluence points for making targets or as simple target points without any confluence. But this is pretty much clear that you can see the reactions. You can easily see the reactions on the charts. Look, breakout, pullback, continuation. Then we had breakout here, close above this level, then again breakout, pullback, continuation. Look, breakout, pullback, continuation. Okay, so you can see how these levels are very, very strong in the reactions. So I advise you really to use this. I don't know which system you're trading, which kind of trader you are. Maybe you don't like to trade price action, but whatever system or method you're trading, this is very effective. So this can be used as a great addition to your current trading system. Okay, current trading system. Okay, now we will move to technical indicator called Fibonacci fan. Okay, this is an indicator that helps traders to see possible support resistance lines in ongoing or developing trend by displaying these points in a price channel formation. Basically, Fibonacci fan will look something like this. Okay, it will give you great levels, basically same retracement levels of Fibonacci retracement, but only it will be shown as channels. Okay, channels. So Fibo fans are drawn same way as Fibonacci's or expansions. Guys, remember, this is important. What I'm teaching you, always from left to right. Always from left to right. Okay? You cannot plot it from right to left because you will be effectively plotting from the present into a past. We want from the present into the future. But basically we are looking at the past at the same time. That is why we are plotting Fibonacci from left to right. In uptrend is the same. Is the same from swing low to swing high. In downtrend from swing high to swing low. So this is uptrend example. How did I tell you to chart it? From left to right. Okay, from left to right. So this is point A, this is point B. Okay. In uptrend from swing low to swing high. Okay, from swing low, guys, to swing high. This is for plotting Fibonacci fans. Point A, point B. From left to right. Okay, always. Then, when you place this vertical, let's say angled line, you will get these levels. So, once you plot point A with point B, MetaTrader 4 platform will plot you these levels. 38.2, 50, 61.8. You can of course add additional levels, but you're not obliged to because you have confluence perfectly shown on the chart. Okay, you will see at this slide how you can make a confluence with Fibonacci retracements. So, Fibonacci fans are used to find possible support and resistance zones. This will help us to minimize risk on positions as well as possible entry and exit points depending on your trading strategy. It will also help you to predict the range of a prevailing trend. The angle of the fan shows you guys prevailing trend. So this is the angle of a fan. This is the angle. Look, the angle. And you can see that the angle shows you that the price is in uptrend. Look at the angle. Okay, so it will give you the possibility to predict the range of a prevailing trend. This is the range in between these three lines, which are most important for Fibonacci fan. And also that will give you the angle, which is pretty much fine, angle. Pretty much, it's very clear, guys. Look at the angle. Okay. Fibonacci fans are used in conjunction with Fibonacci arcs and also in conjunction with other indicators. Look at this slide. I have drawn Fibonacci retracement in uptrend. So from point A to point B. And I got all these aqua colored levels. Okay. Then I draw a Fibonacci fan, again from left to right, from bottom to top. And then I got this fan. This fan is basically telling me that the price will indeed respect these levels. Look how it respects it. But it also gives me the angle of a prevailing trend, which is basically uptrend. Until the price breaks this lower 61.8 line, we can assume the price is in uptrend. But look, once the price failed to close above, look, we can say that the price now started a possible downtrend. Look how Fibonacci fan is giving hints to you. Just watch at the price action. It's telling you everything. Once the price is inside, it's an uptrend. Once the price fails at this point to close inside and then breaks this trend line, we can see that the price is basically making a new swing to the downside and is possibly entering a downtrend. But look how clear that is. And now look at these levels. If you watch Fibonacci retracement in comparison to Fibonacci fan, 38.2 here, it's same, 38.2. 50, look at this, 50, 50, 50, 38.2, 38.2, 61.8 and 61.8. Okay? You can see it clearly on the chart. Those are the same levels of the price, but Fibonacci fan, in addition, is giving you prevailing trend and prevailing channel. This is uptrend channel. And it gives you the cue that price might start a downtrend once the price fails to break, fails to close inside the channel. Okay? Now Fibonacci arcs. Let's move to Fibonacci arcs. Fibonacci arc is an indicator that helps you to spot possible support and resistance zones based on previous impulse moves. Now, just don't be upset if your chart is showing you these flat lines instead of circles. It's normal because the levels will be the same. But sometimes when you scale to 1.1 on MT4 chart platform, it will show flattened lines. But it's perfectly fine because the levels are still the same as if you were using ellipse. So from left to right, again, from left to right, A is a lowest point, B is highest point. From left to right, from left to right. And you will usually will see flattened lines, and they will show like this, 31.8, 61.8. Now, what are Fibonacci arcs? Fibonacci arcs are simply another way to find support or resistance zones. They have added advantage of forecasting a prediction on how the market will range. Okay? That's also useful to traders who are trying to make profits from a sideways or ranging market. And there is a popular strategy which is used to combine Fibonacci arcs with Fibonacci fans, and the points where two indicators cross will indicate extremely strong areas of support and resistance. Okay? So if you take a look at this chart, you can see how the price is basically making you a horizontal levels of support and resistance, which are basically channels where the price is expected to bounce from, as in this example. But those are just simple support and resistance zones. So there is nothing spectacular with Fibonacci arcs. But for me, let's say, if I plot it on my chart, it's interesting how they make a confluence with Fibonacci fans. So these are Fibonacci arcs, and these are Fibonacci fans. Okay. Now look at confluence points. Look at the confluence. Look at this confluence here. Look, that is what I'm saying to you. You need to combine different elements and you will get a clear picture. This is effectively uptrend, right? This is the lower channel line of uptrend. So once the price is here, inside the channel, we can say that this is uptrend. Once the price fails to break, we say that retracement might happen, deep retracement or reversal. But look at this point. Look, 31, 38.2, 50, and 61.8. Look, rejection. This is rejection candle. Look. But this was obviously a fake out, so-called fake out. I promise you that I will show you a system where you can trade fake outs, and I will do that. And I think it will happen in January. And I will show you how you can benefit from these moves. But now look, just concentrate on this price here. The price closed here, okay? It rejected from 50. And look at the confluence. It's perfect. But then look, it failed to, next candle failed to close here in this range. It basically went down. So at this point, we can assume that it will be either deeper retracement or a reversal. And look, the price tried to close in the channel here, but it failed. And look, it's very clear how these two important price action tools are making a confluence. Ellipse, Fibonacci arc, and Fibonacci fan. Look, perfect confluence of these two indicators. It tells you everything. You don't need to look at any other sometimes. When you see these simple things, look, you can even draw a trend line here, and look, it's very clear that you can short this candle here. Because the price rejected, then failed to close inside after this candle. And look at the confluence. Perfect. And now we have final Fibonacci tool. It's called Fibonacci time zones. And Fibonacci time zone is also important to traders who are basically trading momentum and volatility. I know that most of you probably are not familiar with Fibonacci time zones, but needless to say, Fibonacci time zones are not, for example, for people who have a vast experience in trading Forex, they are not so important. For traders who are starting to trade, it can be helpful. For me, I personally don't use Fibonacci time zones, just because I know when volatility will be high and I know when volatility will be low. It's just an experience. So you don't need to stick to Fibonacci time zones if you have experience in Forex trading. But if you are unexperienced Forex trader, of course, you will benefit from Fibo time zones. So those time zones measures the chart using vertical lines to determine points of increase, volatility, and the times at which they will occur. The logic is that if human beings are a living expression of the golden ratio, then surely 61.8 will indicate times of peak performance or increased interest in buying or selling decision. So what does that mean? It means that, what does it mean? It means that we need to understand the calculation. Those time zones are drawn like this on your chart. And the base interval is simply multiplied by 61.8 every time to get the next Fibonacci ratio. So this level with this, this with this, this with this. And basically you will get lines like this on your charts. Method 1, how to plot it. First method is plot it from swing low to swing high. That is the first method. The second method is plotting it from double top or double bottom to get Fibonacci time zones, or double top or double bottom. This will look like this. This is the first method, point A from point B. So this is the low, this is the high. And you can see where volatility is expected. And you can see how volatility is really, really increased in this space here. Look, this is volatility, but this is really great volatility. This is huge volatility. This is also huge volatility. Okay? And this is how we can plot it with double tops and double bottoms. Okay? This is basically double top. And look, increased volatility here, here, here. But if you, as I say, if you know how to deal with price action, basically you know how to deal also with volatility. Now I will show you this on, just confirm guys that you can see my MetaTrader 4 and I will lead you through this. Okay? Do you see MetaTrader 4 platform now? Great. Thank you for confirmation. Boyki, Robin, Anvnat is saying, yeah, great. Now, let's start from Fibonacci expansion or extension. So, let's see, for example, we want to enter this position here, okay? So, let's say, for example, that we have determined that our entry point is here, and we want to see where the price will go. So, we go Insert, Fibonacci, Expansion. Point A to point B. Look, this is point A to point B. It's better now. So from point A to point B. And look this point C. You need to adjust point C. Okay? Where will you put it? At your retracement level or at the candle where you have taken the entry. Usually this is next mini swing. And look, the price has hit both of those levels. Look. Okay? So this is how you place Fibonacci expansion. Don't forget, guys, to do this. Let's make another example, for example. Let's make another example. Let's use a downtrend. Okay, let's say that we want to short this candle. This is basically railway pattern here. For all of you who are familiar with price action, this is so-called railway pattern here and indicates a possible strong reversal. So let's use this example. Insert Fibonacci expansion. Okay, now we will use it like this. Don't forget, this is important, guys. You need to move this. You need to move it. It won't be plotted automatically. You need to move it. Place it here because this was the swing and your entry point. And look, the price reached all of these levels and even broke through it. But look how good reaction is to this final expansion. Breakout, false breakout, rejection, rejection, rejection. Look. But this is how you basically use it. Okay? Now, let's plot another tool. Let's use Fibonacci fan. Okay? Fibonacci fan. Fibonacci fan. From point A to point B, guys. Look, now just look at this chart. Point A, point B. Look where the price reacted. 50, look. Look, but first reaction was at 38.2. It was rejected, look. And look at this, 50, it was bought. Then 61.8, it was bought again. And what happened after the price failed to close into, look, the start of downtrend? This is so simple, and this is very effective. Just draw a trend line here. Let's place a trend line here, okay? Let's say we will use trend line for, we can use it like this, just for making, let's say, this example, or we can use it like this. Yeah, this is better. Look at this chart. The price was in uptrend. It was bought from this level. It came at this level and then it was sold. So profit could be made here. Not that bad, just simply by trading this, 25 pips of profit. Then price came to this region. Look, 30 pips of profit. Again, 40 pips of profit. Then this candle failed to close here. What did I tell you 10 minutes ago? That if the price is in this channel, because Fibonacci fan is also a Fibonacci channel, and it's also a price channel, the price is in uptrend. Look, the price is in uptrend, but here this candle is telling us that the price will reverse. And look, 1.2, this is trend line, and look, it perfectly declined this trend line, and it failed to close inside this channel. And look where the price went subsequently. Then what you can do, use Fibonacci expansion, place your entry here, and then you can trade basically, well, you can trade while using these kind of things. Fibonacci tools, look. Now let's move to next tool, Fibonacci arc. Fibonacci arc. Let's say we want to use downtrend. So this is swing point. This is, look, it will give you the ellipse. Don't worry if it's flattened. Look, this is the ellipse. But look here. It will be flattened, but it doesn't matter. Look. Look now. This is swing, right? Point A, point B. Or you can make it like this, using the last swing. So this was, let's say, the last swing at this point. Look how the price reacted to these levels. Look. Try to spot a confluence here, guys. Try to spot a confluence. Look. Look. Railway perfectly from these lines. And look at this. Rejections. And then again, rejections. Look at this. Just spot it yourself. Look how good this is. And what did we learn today? That Fibonacci arcs are also strong levels of support and resistance. They are indeed strong levels of support and resistance, because they are giving us the cues where the price will possibly go after a retracement, or where it will reject. So we can take both trend entries and counter trend entries. Okay? Look at these rejections. Simple. And look at ratios. And then we can use Fibonacci time zone. How we plot it? Simple, guys. Fibonacci time zone. Let's say, yeah, we have nice example, double top. Effectively, we will use this double top here. Insert Fibonacci time zone. Look, it will give you the periods of increased volatility. Look. Because each of these spaces are multiplied by 1.6218 to give you the next. And you can see points of volatility. Okay? Now you can combine everything to give you nice trading method based on price action. I will just give you a few directions where you can head. So, let's analyze this chart. We have head and shoulders here, right? I didn't prepare this. This is now from my head. I'm looking at the chart and I speak, so this wasn't the part of my presentation, but I will give you this before we finish with this webinar. So let's analyze this Euro Yen 1 hour, and I will use these 2 points. So where we can spot head and shoulders. This is basically left shoulder. This is head. This is right shoulder. And typically for head and shoulders, we want to see break of a neckline. So we can say that this is effectively a neckline here. Okay? And it was broken. Look at this trend line, how it perfectly follows head and shoulders breakout. Okay, now we know that head and shoulders is effectively bearish pattern. We want to see an entry point. So this is the time when head and shoulders was broken, and this is where this trend line was retested. Let's draw Fibonacci retracement first. We will go from, of course, top to bottom, and we will draw it like this. Look, guys, confluence point, 50 retracement and a trend line and a railway pattern. Now, would you trade this if you saw this on your charts? I would definitely trade this because this is no-brainer trade. Trades which are very simple and which do not require many, clustering of indicators, over-analysis, or I don't know what else, are called no-brainer trades. No-brainer trades are very simple and very effective trades. Look, trend line after head and shoulders break, railway pattern here, 50% of retracement. Let's say we made an entry here at this candle. Maybe not here at the top, but somewhere inside the candle. Now, what do? Insert Fibonacci expansion. So, we will use the expansion for determining our target from left to right. Same. We use basically the same swing point for expansion as we used it for retracement. Remember this, same swing point for retracement and for expansion. And this is point 3. We move this point 3 here. Look, now just look at the chart. Look at these wicks. I didn't plan this. This was unintentionally. And look, I did this now at this moment. I didn't know what will happen, but I'm seeing the same as you. You are also. Look, touch, breakout, look, retest. Then look up. This is perfect. This is perfect. Look. Look. Just take a look. So you're basically using now price action in its core. This is the core of price action. Retracement, point A, point B. Point C or point 3 is our entry. It's confluence with a trend line with 50% of retracement and with the railway pattern. Look, and the targets. First target hit, second target hit, third target hit. And look at reactions at these levels. Look how price is perfectly reacting. Now, let's say that you want to use Fibonacci fan. Okay? Fibonacci fan. Look, where was your entry? 50, 50. Look, now look at the fan. Look how strong the trend is. Look how strong the trend is. Because the stronger the trend, look, the price is even breaking through this channel, but it doesn't matter. It's still in downtrend. As long as it is below and inside the channel. Only here we can assume that this is the end of downtrend. Okay? Only here because this upper channel high was broken. But look how it perfectly followed it. Yeah, railway pattern. The question is, what is railway pattern? This is, guys, railway pattern. Let me remove all of these things. Now you got the idea how you can trade. This is railway pattern. This is a railway pattern. These two candles are making a railway pattern here. This is dark cloud. This is dark cloud. This is railway pattern. This is dark cloud. This is railway. Okay? Look. First, you need to see a strong buying, then strong selling. Okay? Yeah. And we have to wrap it up. Yeah, just a little. I need to answer some questions, then we can wrap it up. Which pattern are you talking about? Yeah, this is railway. I showed you. So this is the perfect example of railway pattern. Do you consider fundamentals? Yeah, Boyki, I consider fundamentals, but only if they can give me an entry. Take a look at a GBP dollar chart. Today we had great news for dollar. Basically, we had advanced GBP very positive, and GBP dollar was going down. I consider this fundamental as it gave me the chance to get a long position. And I closed my long position just before I started this webinar. I got some 25, 30 points of a profit because I analyzed GBP dollar today as a potential uptrend, long position. And I took long position after the news when price was dropping. Okay, so I consider fundamentals, but only as possible a trade entry. And of course, I consider very strong fundamental for trend. We will need to talk about these things in some of our next webinars. For example, if NFP is positive, I consider dollar pairs to be bullish in next 2 weeks, just for example. And yeah, these are bearish engulfing types, but railway pattern can be either bullish and bearish. So bearish, this is also railway pattern. So first you have bearish, then you have bullish, or you have bullish, then bearish, vice versa. Guys, we need to wrap it up. Thank you for listening to me. We will have these sorts of webinars. I think I will really strive to give you the best possible price action webinars because I trade price action. So thank you for listening to me. Sign up for more webinars to come. I wish you everyone green pips. And as I always say, trade safe. Cheers.